Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
We're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Knicks in 5.
Knicks, 5, 6, 7, whatever it takes. Knicks, go Knicks.
Yo, Rob scooped this jersey up.
Yeah, $20 from the guy on the street outside the hotel. We were rocking this
Shit's
last
dope.
night at the bar. That is the
We got-
claim to
we got
fame.
drunk last
30-point comeback.
We
Let's
wow.
go. Go Knicks.
We had a bipolar night last night at
Oh my
Bleecker
goodness.
Street
From
Bar.
the first half to the second half?
My God.
What?
Whole place cleared out halfway through the game, halftime, place was cleared out, vibes were down, all the chicks were leaving. It's just bad vibes. It's just bad vibes.
I
And
think
then
we
all of
had
a sudden,
one of the guys in our group dropped.
yep.
They were dropping like flies at halftime.
A16Z stablecoin VC dropped. Not sure what that means about their firm, but I'm just saying that's what happened, guys. Great to have you back. It is Thursday, June 11th, following a big Knicks win last night. Welcome back to the Tokenization Tower, The Nest, broadcasting live from the financial capital of the world. You're watching the Rollup. Again, today's Thursday, June 11th. We have a great show ahead.
And we are here with the Plume team, stacked office this week, and
Yeah.
we've got a VIP event tonight. So if you guys are in town in New York City, please reach out. We want to get all of our friends here for a great event tonight. So
Yeah.
excited for that. Coming off a great Knicks win and a great show for you guys today. We're gonna get into it.
Yeah, as always, guys, shout out to Plume. We are here at the Nest in the Tokenization Tower. Plume is building on-chain infrastructure for asset management. Their Nest Vault product, guys, $100 million deposited from EtherFi as of late. Guys, let's get into the topics. We got a busy show.
Yeah.
Tower, markets and weather, as always. And then we got Monad's co-founder, Keone G. Monad, and Hyperliquid Strategy CEO, David Schamis, in the house, following their massive
Yeah.
announcement.
They certainly did have a big week last week.
Huge week.
Lot of buying of hype. I think over 2 million hype.
Yeah.
And raised cash. So they've been able to do. Saylor did this. He was able to buy Bitcoin and raise cash. David Schamis is able to do this as well.
Yep.
And we're gonna have both Keone and David in the tower coming up later in today's show.
Indeed, guys.
yeah.
It is a beautiful, sunny, dunny day here in New York. Let's get into the markets, into the weather. We have so many videos and things to show you guys from last
Shout
night.
out to Trezor for powering today's topics, guys. We've had a string of great shows.
Yeah.
We've obviously got our new overlay system here looking very, very nice. So we are excited. And hit us up in the chat. Get fired up.
Use code Rollup10 at Trezor.io to grab your Trezor today, guys. Let's get into the markets, into the weather. Before we do, let me tell you about Frax, our premier stablecoin partner, open, stable, borderless. For more information, start using the future of digital money. Visit frax.com. Guys, it is 87 sweaty degrees in New York City today, following the Knicks win. The city's electrified right now.
It really is. There is
Place
so
is on
much
fire.
energy happening right here in the capital
on
of the world.
fire.
Pretty incredible. Everyone's honking in the street last night. They're
Dude.
running around. Everyone's doing body slams and high-fiving each other in the street.
Just like Knicks in 5 everywhere. I mean, comeback of the century, greatest comeback in NBA Finals history. It feels like 91. It is sweaty in here today. I'm gonna be sweating for sure, but the boys
Got
are
the
up.
jacket on. The
Boys
jacket
are
might
hanging
come
out.
off. Knicks in 5, 6, 7, really whatever it takes. I mean, I hear Knicks in 5, I hear Knicks in 6, whatever it is. Knicks are taking this one home.
Yeah.
Insane game.
Yeah.
Absolutely incredible. Markets are bouncing back a little bit. It's hot. It's sweaty. Place is on fire. People were climbing the light poles and the street signs in near Madison Square Garden last night between 7th and 8th Avenue. They were absolutely
we had a Spider-Man appearance last night as well. I got a video of that. It was pretty nuts.
On my way downtown, this woman was carrying an inflatable banana in the subway. There's just ridiculous things happening across the board.
Ladies and gentlemen, as always, our weather is powered by Relay. Visit relay.link for your cross-chain swaps. Let's move into the markets. Before we do, I'm going to tell you about I'm going to tell you about Denari, our tokenized U.S. equities partner, bringing real-world stocks on-chain. Visit denari.com to do more with your stocks on-chain. Guys, we had a little bounce overnight. Bitcoin up about 1%. ETH up a little bit, down a little bit. Solana holding on. ETH and Solana is kind of holding on for dear life here. Chainlink looking all right. Near looking all right. Hyperliquid got a nice bounce. Bitcoin's kind of holding on the edge of a thread. PURR came out with some big numbers. They got a nice bounce. I mean, yeah, we're kind of hanging on to a thread here, guys. Hanging on to a thread.
Big IPO tomorrow.
Huge IPO tomorrow, as we talked about yesterday, right? I mean,
big IPO
huge.
Tomorrow.
So,
yeah. So I was seeing some more on this in terms of putting some relative numbers behind what the SpaceX IPO is going to bring to the space.
Yeah, it's going to be a liquidity sink.
Yeah, well, Google had about $80 billion that they raised off their equity a couple of months ago. This is going to have a similar effect on the market. So we know that there's large amounts of capital being raised in the market. Pretty intense week. We're going to see how this reacts. The vibe last night with some of our friends at the bar was that SpaceX could do well, right? There's a lot of fuel. We're obviously seeing some sell-off in the market. And in theory, that moves its way into SpaceX. I agree. I do think SpaceX could do well. I think the market is kind of selling into this event, and it might rebound coming out of this event. But I think once you get into the second and the third, and you start going into like $3, $4, $5 trillion of new supply in the market, whether it be supply unlocks from SpaceX or it be the Anthropic, the OpenAI IPOs, that's when I think this thing is just going to get too overweight.
Yeah, man. I mean, we'll see how the market opens up. Polymarket has it as very likely for it to trade above $2 trillion tomorrow, which is significantly above the IPO price at $1.77 trillion. So we shall see. As always, guys, our markets are powered by our friends at Zama. Visit zama.org to learn more about their privacy and confidential transaction solution that they've built out. They have a great portfolio feature coming out later this month as well. Guys, let's get into it. We've got Nick's highlights. We've got news. We've got announcements. Before we do, let me tell you about Near, your home for building, discovering, and using AI-powered apps on-chain. Go confidential across a single Near.com account. Ladies and gentlemen, the best comeback in NBA Finals
The biggest
history.
comeback. So they were down 27 at halftime. Largest deficit was 29. Guys were using Claude to research whether this had ever happened.
Yeah.
A 27-point comeback had ever happened in NBA Finals history. It hadn't.
No.
And so we...
Wait, at the bar, these guys were using Claude to discover...
yes, our friend at one of these VCs that we were out with last night, they looked up whether anyone ever had come back from 27 down at halftime to win in an NBA Finals game, and it had never been done before. And...
man,
it's now been done.
Man, this play, guys. Let's play this video. So we're at the bar. OG
so this is the Knicks are up here. So this is the last possession from the Spurs with 2 seconds left.
Yeah, so OG already hits his shot, his tip in. We're at the bar. The place is silent. And
I think we were chanting defense at this point.
we're watching Stefan Castle right here get
He's
open.
so open.
Oh my gosh. If Cat didn't tip
Towns
that,
get a finger on it.
dude, nobody even gave Towns credit for this.
Well, no one even realized it last night.
It was I thought that it was just a bad pass. Like when I saw it, I was like, wow, how did he throw such a bad pass? Dude, that tip on that, I mean, that changed everything in the game. Absolutely changed everything.
I mean, there were so many moments during the game where I'm just floored, both positively and negatively. I mean,
Yeah, the whole game.
how about Josh Hart missing the layup?
Dude.
Oh my gosh.
Bro. He couldn't
That's
even...
when the bar was silent. Bar was
should've just
silent
dunked.
when this guy goes up with 2 hands. You practice this since you're 4 years old, making your layups. And he just bobbles it above the rim.
Dude, off the back of the rim. Off the back of the rim.
I mean, the last 2 minutes of this was an insane stretch. Down
unreal.
27 at halftime, made a little like 10, 13-point run, got it within 15 with like 9 minutes left. All of a sudden, it's like a 4-point game. There's like 2 minutes left. You go, Spurs take it. And I'll give credit to the Spurs coach. Anytime the Knicks went on any kind of run, timeout. 4-point run in the first quarter, timeout. Didn't let the Knicks get any momentum, and then just chip away at that lead. Never gave
Dude,
up.
that was terrible coaching though. Like
By the Spurs.
they accelerated the ball so many times forward instead of
Holding and dribbling out the
just
clock.
like chilling.
Yeah.
Like Castle, we had
how
a
about-
terrible turnover.
Yeah, how about-
Brunson had a terrible turnover.
And then De'Aaron Fox goes up for the layup.
Dude, yeah, I think we're gonna play that. Let's go ahead.
Let's play some more Knicks clips if we can.
Yeah, let's
Rather than
get that De'Aaron Fox video if we can.
Yeah, we gotta skip ahead to some of these.
There's
Knicks
one
clips.
of this video by this guy that does these loops for like Bob Maneri or something, and he's just dogging De'Aaron Fox. Yeah, let's get this one up. This is the important one. I think this is the one that Kat did not get enough credit for. Let's pull this video up. This one never be talked about enough. So play this video. You'll see that Kat got his hands on the ball here, and it made a massive difference. Huge difference. Huge difference. I mean, this was the difference between Castle dunking this ball and then ending the game.
Yep. Got a finger on it, multiple angles. Great job. Not foul, goes straight up. Close there.
Imagine they called a foul on that last part.
Oh. One lead change the entire game.
In the last 2 seconds.
We've got to play Anunoby's.
Dude, that tip was everything. Dude, the bar literally, everyone took their drinks and just started like the place just turned into like a champagne factory. I got so much like White Claw beer in my eye.
In my
I was
eye,
like,
right?
oh.
A whole. I turned around as soon as we won. And there's people throwing their drinks from
I know.
across the bar.
Oh my goodness. All right, let's keep it rolling into the next Knicks highlight here. I think there's one from De'Aaron Fox or the OG tip.
I think we have maybe way in the beginning here. We have one. Yeah, let's go ahead and play this, and then maybe we'll get a live shot from the bar last night.
The live shot. Guys, what a night for the Knicks. And, we're not looking too bad out there right now. We're still waiting for this SPCX IPO. We're still waiting for, some bottoming formations here across the charts. All right, let's get this video up. This is De'Aaron Fox. This is a funny video. You guys got to turn audio on this one. It is hilarious. De'Aaron Fox made some terrible plays. And in this video, you really see how the coaching and Fox himself both kind of like really let the team down.
On this play especially.
Go ahead and play it. This is just...
So let's go through every dog shit play that De'Aaron Fox made in the second half. Just a head-scratching pass by the little fella here. Then 60 seconds later, Fox, who should be the last person on planet Earth, does the jet dribble, step back shot, does that. So Fox actually gets taken out after that shot. He checks back in with a minute left. And what in the actual fuck is that pass? And then the very next possession, at the end of the third quarter, Fox again, dribble, right off the foot, and out of bounds. And then this possession right here, 3 minutes left,
Fox might have been
4-point game. Imagine this being your possession. This is the biggest play of the game. Fox is having a family barbecue. Dribbling the ball off his foot. No rush at all. Oh shit. There's only 6 seconds left in the shot clock. And then you got the play everyone and their grandma are talking about.
Yeah.
Fox looks like he has a breakaway. He can't outrun OG Anunoby. He can't dribble out the clock. He decides to go up and he gets swatted. And then on the final possession of the game, my voice is cooked right now. Fox is on Anunoby. Wemby is on Brunson. Fox then decides to help Wemby. He doubles Brunson. No one's on Anunoby. End up, maybe. Yes, maybe. That will be your winning bucket.
Yeah, man. De'Aaron Fox, man. When you put it like that, you can see how the coaching and just the general lack of just
ability to finish down the stretch. I mean, look, I do think that, the Spurs coach did a decent job calling those timeouts early, but when you get down the stretch and you can't execute and you don't have a plan to stay aggressive but also take some time off the clock, that's what you end up with. You end up with quick, contested shots, maybe deep in the shot clock because you're not looking for layups. You're not spreading the floor. Man.
All right, guys. I think we might have one more Knicks thing here, and then we're gonna keep it rolling back into the usual programming for us. Talk markets, talk crypto, talk what's going on out there, announcements, news, etc. Because there was a hell of a game.
Come on.
This was live. Everybody live to Robbie's phone at the bar.
Come on.
Last play of the game, I believe.
Let's get audio on this. Place goes insane.
That tipping was insane. Insane. Unreal.
Wow.
And that, ladies and gentlemen, is the New York Knicks. What a game. What a game.
Yeah.
What a game. All right, guys, let's get into the regular programming here. Fun starts the show here. Let's get into our next news, our next content, and our usual flow. Man, it is looking interesting out there.
Yeah, and I'm gonna let you take this one. And it looks like Alex Karp has some things to say.
Yeah, apparently so.
Yeah, what do we have going on here?
So, Alex Karp says that most of the GDP is generated by men, despite most graduate degrees going to women, indicating a massive upheaval and economic correction in the future as a result of AI. Interesting take from Alex. Quite a character, this guy. Let's go ahead and play this video and see what he has to say here. He's Mr. Alex. He's basically suggesting that vocational, technical, hands-on occupations may prove more resilient to automation. Challenges the assumption that the more formal education automatically transforms into greater economic security. I agree with this. I'm a dropout, did not graduate college. Also agree with kind of the general flow and framing from Alex here. And yeah, I mean, AI's biggest impact may not be eliminating jobs altogether, and maybe reshuffling which types of skills command the highest value, forcing a rethinking of education.
Let's play the video.
Got in trouble for mentioning that, 37% of our GDP is female. 50% of Americans, 52 roughly, are female. There's a dislocation there. 67% of people who have gone into graduate school are female. These parts of the market are going to be put under massive pressure. It doesn't help to pretend we're not going to have these problems. In fact, the progressive position is progressive because you speak about problems like for people. I got in trouble for mentioning that, 37% of our GDP is female. 50% of Americans, 52 roughly, are female. There's a dislocation there. 67% of people who have,
essentially saying that, AI is going to come in and make a strong economic impact. GDP is a measure of productivity in this country.
Yeah.
AI is set to make the workforce much, much more productive. So I think he would agree that AI and GDP is going to go up, but how we attribute, what we attribute that GDP increase to is going to get reshuffled. And I think that's what he's describing here. He's essentially saying that college degrees are no longer, right, adding much if you're not applying those degrees in the right jobs, in the right careers that are pushing the needle. AI is pushing the needle. Things that can't be accomplished by AI are pushing the needle, like vocational jobs. And I think he's also just bringing up that the lion's share of vocational jobs are done by men, and how if there's, and then there's, maybe this gender sort of impact that he's describing here. I'm not sure how he would see that shake out, but, one thing that comes to mind here is he mentions GDP to women, GDP for men, but then there's also going to be this rising share of GDP attributable to robots, AI, genderless machines. That is going to take an increasing share of the GDP as well. And what happens to society when that market share is increasing and then we have decreasing market share from men and women alike?
Yeah. I mean, AI is going to reshape labor markets. It's going to influence the distribution curve of wealth, of power. It's going to alter political dynamics. It's going to change a lot of things here. I don't really have much to add here from Alex, to be honest, guys. He's a character. He's got a lot to say, per usual.
The last thing I'll add is that, we had another friend of ours last night at the bar making a case for, some of these more questionable industries. If we have AI and, come into them, there's maybe some altruistic enhancements that can be made to these industries, because people that are going to do them are going to do them anyway. For instance, if you're going to be a welder, you might want to be a welder.
Yeah.
And so you should. It's not necessarily going to prevent people from doing what they want to do, but if you don't want to do something, you might not be forced into doing something. In which case, AI is great on both productivity as well as freedom. So let's keep moving along here.
Yes, sir.
Next clip
Before
is from...
we do, let me
Everybody left before.
How is it going to shake the blockchain regulation? Again, guys, we have the midterms in November this year, which is going to lead to a change in the guard, and again, we're trying to get Clarity Act in before then. Let's listen to what he has to say. The new president of Securitize here has a lot of experience.
Securitize should be going public here.
Yes, SCCZ is the ticker there.
So I think regulators now are extremely pro-innovation, pro-blockchain. They really want to see this evolution happen. However, I think it's important to think about, what happens in the next 2 years, right? We have a situation where, I think most people are expecting the House of Representatives to flip to the Democrats in the fall. The SEC kind of reports into the House Financial Services Committee. Who knows what happens in 2 years? And what we really want to do is make sure we build in a way, we build responsibly in a way such that regulators are comfortable with what's being built. They are comfortable with how this is evolving, and we don't have a pendulum swing back the other direction in 2 years. That's definitely something we all want to avoid. So I think regulators now.
Yeah, I agree. I mean, I think we don't want all this work that we've been putting in to make the industry more regulatory friendly and scalable to just kind of go by the wayside because of the midterms. That would be the least ideal outcome. What is the Applied Market saying?
So the most likely outcome is that the Democrats sweep, meaning that they have both the House and the Senate. Second most likely is that the Republicans hold on to the Senate, but the Democrats do take the House. I think 80% chance that they do take the House, which means that we're going to have some, political reshuffling on our hands as well. The House controls subpoena power. So I was listening to some people there making the case that we're going to maybe get hit with some lawfare that could help, or that could slow down some bills, because if the House has subpoena power, they can basically throw a bunch of subpoenas, lawsuits at Trump.
Yeah.
Bring him in for questioning, bring his teams and whatnot in. Not only does that take up their time where they could be, doing more productive things, but it also forces them into maybe awkward questions, which could cause a lot of media drama, and then they have to, basically correct themselves and correct all these things as well.
Special appearance.
Yeah, here we go.
Yeah, look, I mean, whether the Dims get it or not, I think we want to see a continued progress forward, and that's what really matters.
We don't want to slow down progress.
Exactly.
So. I will, and one thing that is helped, regardless of the midterms, which way these things shake out, the SEC and the CFTC they're not part of this. They're appointed, right? They're not elected.
Yeah.
So we're going to continue to have the innovative SEC and CFTC, which are making tremendous strides, and we can continue to get a lot of great work done in that. Guys, before our next piece.
Let me tell you about Infinify, guys, our DeFi partner, building DeFi infrastructure for simpler access to on-chain yields, higher yields, no leverage. Visit Infinify to learn more about what they are doing with the Infinify project, guys. All right, guys, back into crypto, back into the opportunity set. We got PURR, we got Hyperliquid, we got new products available. Let's get the chat going today, guys. Come on, guys. All right, so 3Jane is now open to the public. Mint USD3 to earn Jane. Liquidity mining details are below. This is like one of the more slept on credit RWA companies that I think has some actual like real backing, real footing. So they have publicly launched their USD3. It's a credit-backed yield coin. And basically it generates yield from warehouse facilities and credit lines rather than traditional crypto collateral alone. So its initial issuance is limited to 50 million, and you earn Jane token, SUSD3. You can use this in Curve, Frax, Morpho, Pendle, and backed by Paradigm, they're trying to expand on-chain credit beyond over-collateralized lending. Is something that we've been trying to figure out on-chain for a while. Let's play this video and just get the quick vibe check.
So USD3 generates yield from warehouse facilities and credit lines rather than traditional crypto collateral alone. That's an RWA.
We got Alex taking a selfie. We got Atan's vibing. Yeah, I like the branding. I like the product. I think it's a good team, good product. I think that they're going to do well.
This gives me very like Maple Finance vibes, slight Sky vibes.
Yes.
We're going and we're using on-chain mechanisms to generate capital and coordinate capital. And then we're taking that money and we're putting it into high-quality assets, high-quality yield-bearing assets like warehouse facilities and credit lines that can pay some yield, right? And so on-chain capital is meeting off-chain yield.
Right.
Which I think is a good match.
I'm bullish.
Yeah.
I'm bullish.
I think so.
I think this is like the next expansion of where DeFi is going, how the space is going to keep progressing. It's new yield sources, off-chain yield sources. All right, guys, let's get into it. This is the title of the show. We're going to tell you about LeFi first, our universal market access for digital assets partner here on the Rollup. Start your integration today at Lee.fi for all the founders and businesses out there watching. Guys, huge update from Hyperliquid Strategies. Huge. They added 2.5 million hype in this single week. They issued 22 million new shares, which means that like that thing collapsed pretty hard from that 11. What it was at 11 point. I mean, dude, I was euphoric off my ass at 11 and a half. I mean, we had 3 trading days to sell above 11, and of course, I didn't. But the reason, I mean, round trip to like generational. I mean, wow. And so
it all happened so fast.
They issued these shares, and that's probably why there was a bit of a extended sell-off. They added $199 million of cash as well, and they
Wait, so
also,
just to ask on that. So you think there was an extended sell-off in PURR because they were issuing these shares?
Yeah.
They were selling these shares for cash to raise cash.
yes, and to buy hype.
Okay.
It's kind of sick that they're selling their own stock to buy more hype and to then have more cash. So
Yeah.
it's like they're like managing the stock for you. Like if they think like they were like, all right, this thing ran, it's time to get out. Sell a little bit of, issue some more shares, dilute it a bit, buy more hype with that, but get more cash.
I mean, these
on the
treasury
sidelines.
companies are literally. You remember how the whole token is the product thing?
Yeah.
Kind of is. I mean, the whole purpose of this company is number go up technology.
Yeah.
It's financial engineering, right? So you have this vehicle that is built to essentially market make hype.
Yeah.
It's effectively what they're doing. They're using their position in the market to position capital, as move it from off-chain sources, liquidity providers, and move it on-chain into hype.
Yep.
And like you're saying, they're doing that for you.
Yeah, I mean,
And they're doing a great job. Their MNAV is down a bit to 1.11.
yeah, 1.11.
But they did just hammer the ATM, right? So they just sold.
Yep.
They used that cash to buy the hype, and so it makes sense. And now hype is also in a position where it would need to recover. Guys, remember, part of the thesis for treasury companies and buybacks as a whole is not just, hey, we want to slam as much cash as we can into the asset to try to pump the asset. It's, hey, we want to take supply off the market.
Yep, for the long term.
For the long term.
Yep.
These are long-term holders. These guys are not going to be selling anytime soon. They have cash on hand. They can raise more cash. They can do what they need to do in that sense.
Yeah.
They don't want to be selling their hype. And so if hype does, if the macro environment changes, right, cyclically, and we have some liquidity return to the industry as a whole,
Yep.
and a rising tide lifts all boats, and you have supply taken off the market, then these assets are much, much more reflexive. And if you're reflexive and it's a rising tide, I mean, you guys can put the pieces together here. You have more upside volatility, if you will.
Yeah.
And so that is a significant, reason in doing this. It's probably why we see Bitmine and ETH, just continuing to hammer and move so much cash into ETH despite it going down. They're long-term holders. The idea is that they're not going to get margin called, right? And they have the patience and longevity for the macro cyclical nature to return positively with supply off the market. You would expect great things to happen.
Yeah, I'm gonna pull up the HL Eco dashboard just to get a deeper look into exactly the numbers here, so we can just get the screen share up on the back here. We'll see the more detailed numbers and kind of some of the performance as well, because you can kind of see, you guys can kind of see that there's been outperformance on PURR, and there's outperformance drastically to the upside. Like when hype's going up, there's quite a bit of outperformance. And then on the downside, when they hit the ATM like they do and raise cash and end up like actually holding these assets, then they also outperform to the upside. So like today, PURR's up 7.6%, hype's only up 6.2%, and it looks good. I mean, the market's bouncing, things look good. Capital flows remains very bullish. He's saying it's his biggest position. Nothing's changed. I was just DMing with him back and forth, and this is what he told me. So make a good clip here. He says, look, my view is that it's going to be very difficult to break below 50 because that's where we injected more capital in the Coinbase Circle partnership, and they injected into the fundamentals as opposed to just the coin. So basically, that's the level in my mind. Plus, the revenues keep increasing. Basically, in a 200 vol asset, we need to see a series of higher highs and higher lows within that variance. And then we also need to see outperformance against others. If we can have those two things and we align with fundamentals, then the thesis isn't falsified. And so I think that's kind of where we're at. We're kind of at this point where the thesis isn't falsified. And we have a 200 vol asset. It's extremely volatile. And the question is, like, did hype just hit that 52 level and was that it? Is that the lows that we have for a while? Where do we go? But that's the thesis from capital flows. In a 200 vol asset, we need to see a series of higher highs, higher lows, and we need to see outperformance. And if that continues, then the thesis holds.
You said 200 vol?
Like a 200 vol asset, yeah.
What is a 200 vol asset?
I don't know.
That's just a measurement of volatility?
What is a 200 vol asset?
I hope we're getting our, what is this, Claude? No,
Context of stocks.
All right, in real time. I like this. We're prompting AI in real time. You guys are learning along with us. Oh, here's a rough guide. 15 to 20 vol is low volatility stock. 30 to 50 is a growth stock, riskier index. So we are at 150 to 200. Extremely volatile assets common in crypto, biotech, many stocks, leverage products. 200 vol asset means the annualized standard deviation of returns is about 200%. That's enormous. So this is a highly volatile ticker. And so in that, he's saying that we need consistent outperformance. We need relative strength and these two things because of the volatility here. If we don't meet these two things, volatility can go both ways.
A 20 vol stock might move about 1.25% per day. 200 vol asset might move roughly 12 to 13% a day on average.
Sounds about right.
I mean, hype's flying right now. It's up 8%, right? So that's like 200 vol. PURR's up 8.5. Looks good here, guys. Looks good.
Yeah.
Schamis update was huge.
Well, we're going to get Schamis in the tokenization tower in about an hour and a half. So we're going to hear directly from the man himself. My curiosity or hesitation here continues to be with the amount of capital that was poured into AI and whether or not we can sustain a rally amidst, an AI shakeout, if you will.
I mean, this MNAV is the lowest we've seen it in a while. And they're not going to be hitting the ATM this week with PURR at 8. They're not hitting the ATM when the MNAV has compressed. They're going to let this thing run for a bit.
Well, they need hype to go up and PURR to go up in order to hit the ATM a little bit more. So,
and it is. It looks good today, guys. We're bouncing back. I was bearish the last couple of days, but I'm just been flip-flop left, right, and center. Just can't stop flip-flopping, man.
Can't stay away from the
charts.
But
I just keep looking at, I've got a subscription to Capital Flow's Substack, and he's like, dude, nothing's changed in the thesis.
If you're looking at Hyperliquid in a void, in a vacuum, it looks phenomenal. The fundamentals are great. New York Stock Exchange owner, chairman says it's bigger than the NASDAQ. This thing is going to be immense. Nothing about that has changed. But, I mean, there are things that are bigger than Hyperliquid. The macro liquidity environment of the entire world. The war raging on in the Middle East. Oil continuing to just kind of be at an elevated price means everything else gets caught up by the wayside. I don't know if there's an argument if we get all of this capital that's coming to market and we see these things draw down. I don't know if we're going to see outperformance and relative strength in this industry. I don't know if that can happen.
Not to change the subject to Andy, but the game last night, wow, Shine, unreal. Glad you didn't bet that 200 on yesterday's game, huh, buddy? That would have been rough. I mean, look, revenues are staying elevated, at that consistent mark, that two mil a day. Obviously, we kind of hit this major run on the top out. Atan tweeted this as well. It was the first time I saw the TWAPs be negative ever.
Yeah.
That was over the last couple days. That was kind of surprising to me, and I was not expecting that as much. And so, I mean, guys, we're gonna have Schamis in today. We're gonna get the update. It's actually great timing considering the release that they just dropped and kind of thinking about the numbers. So just to kind of come back to the numbers, guys, on this. MNAV 1.1x. Cash deployed to hype 400 mil. Average hype cost 31. Hype held 26.15%. PURR trading a little higher than that now, but pretty much at that mark. 200 mil dry powder, and the MNAV looks great. And here, guys, you can see the outperformance. It's just been like, since these things touched here in December, right? These things basically touched, they just diverged. They kind of touched again in January. They kind of came back and touched again in February. And so one could argue every time that you get like close to, touching, then you're going to expect some outperformance just based on this trend. So you love to see it. You want to cheer for these guys. You want to cheer for Hyperliquid. And yeah, I mean, this was like...
HL.eco, just fantastic site. So Hyperliquid is deflationary at about 3% annualized per year. Performance against crypto assets has been phenomenal. $2.6 billion worth permanently removed from supply. Eddie, do you remember when John Sharb from DBA put out a proposal where he said essentially all of this hype that's locked, they've claimed that they're not going to be unlocking it. They should just say like, hey, and we do this in crypto where we sort of like allocate these tokens, like a portion of token supply to like grants and whatnot, ecosystem funds. When you think about public companies, they have the ability to issue more shares, but they don't do so until it comes time to issue those shares. In the case of crypto, we preordain a portion of the supply. It's minted, it's considered part of the circulating supply, and we just allocate it into the grant or ecosystem fund. John Charb's proposal was, hey, let's just say like this,
just burn it basically.
Let's just basically delete this from the supply. It would be more accurate representative metric for the circulating supply. And if you need to do some sort of, grant or they don't pay for anything, but if in the case you do need to pay for something and you need to issue shares of Hyperliquid to do it, you put up a proposal, you vote it, you pass it, and then you mint the coins.
Yeah. I'm just trying to figure out why this is so reflexive to the upside and the downside. Because on the if PURR owns Hype and it trades at a premium to NAV, Hype is at 50, PURR is at 5, stock's at 750, is 50% premium, let's say. But on the way down, the premium compresses. So you get this really volatile movement here where like on the way up, you get both the underlying Hype growth and you get the premium growing. And then on the way down, you get Hype price compressing and the premium compressing.
Yeah.
And so you get this like crazy loop.
Very reflexive.
So markets
this
price
is true of
per
treasury companies
and fund. They're not valuing current Hype. They're valuing future Hype per share.
This is true of, Saylor doing this Bitcoin per share, Tom Lee doing ETH per share. Yep.
Yeah. So they're trying to keep increasing Hype exposure. Then some of PURR's value come from expected value accumulation. All right. So let's
And the entire job of this company is just to get you a little bit more hype, right? So if right now at 1x NAV, MNAV, you're essentially like, maybe there's $1 billion in there, $1 billion worth of hype. The market cap of the company is worth $1 billion. The MNAV increases because you anticipate that they will get you more hype for the amount of shares that you earn.
All right, so the assumption is that Hype hits $100 in the next 6 to 12 months. And PURR continues to be the public market Hype vehicle. Management keeps growing Hype per share. Crypto market remains reasonably healthy. That's kind of like the biggest question right now is everyone just is like, bottom's going to fall out on Bitcoin. It's going to 40K.
I'm hearing competing theories around, I'm hearing, the early investors that are poised for tremendous liquidity events in these IPOs. Yeah. They're going to be, unlocked and moving into Bitcoin, right?
Yeah.
But then on the other hand, I hear, we're going to sell Bitcoin. Jim Cramer says that Bitcoin is bad money and we're going to sell it to go buy SpaceX. So there's competing theories here on whether these IPOs are going to be healthy or unhealthy for the crypto market.
So let's say hype does get to 100, right, guys? It's kind of a weird moment where I have no choice but to be bearish on hype because everything is so bullish. Contrarian probably won't work here, but I just feel it in my jellies. Interesting.
Wait, what?
Interesting take from New Type. Weird, but we have no choice but to be bearish on hype
because everything is so bullish. What is bullish? I'm looking out there and I'm seeing AI, IPOs, supply over. Remember, these IPOs, guys, they're high FTV, low float shit coins. I think there's less than 5% float on the market when these things go public. And then they're going to get a bunch more supply over the next 6 months to a year. That is tremendous amount of value overhang. You need to, unless these things just drop like a rock on launch, which we've seen plenty of new token launches and public companies do, you need to sell something in order to get the capital to buy that thing. And we're not in some incredibly favorable macro environment with low rates where we're just printing money and using fresh cash to go into these assets. No, there's actually high rates, inflation's high, so it's not easy to get fresh capital. So you need to sell the other thing in order to get the cash to buy the new thing, which brings the old thing down. So I don't know where this bullishness is coming from. I'm looking at equities. They're super highly elevated. It seems as if there's a ton of new supply that's going to be entering on the market.
All right, here we go. If we're bullish, if we're not, that is if IPOs cook us, if the AI trade infiltrates our bags, could be over. But the bear case for PURR, if hype is at 100, is we get like a $13 to $14.75 PURR. So hype goes to 100. The return from here is 62 to 78%. That's about the same.
What is this, ChatGPT?
Yeah. The moderate case is the market keeps viewing PURR as a preferred public hype vehicle. We get a pretty solid premium of 25 to 50%, which is like we just saw a 20% premium on that last run. It was about 1.25, so we were at that 25% mark. Puts PURR at 16.75 to 2010. The bull case is the reflexivity return, the treasury stories intact, investors paying a MicroStrategy style premium. I don't know, I feel like there's a lot of like bad vibes around DATS right now. That puts us at $23 to $30 per at hype at 100.
Okay, so your premise is that hype is at 100, and this is what happens to PURR if Hyperliquid gets to 100?
So the mania case, this is if the market stops asking, what's the NAV? What's the NAV? The market doesn't care about the NAV. They don't want to. Rob's standing up for this. Can we get the behind the scenes shot here in a second? What's the NAV? How much hype will they own next year? $40 to $54 per.
$54
at 100
per?
At $100. Let's get the behind the scenes shot. $40 to $54 per.
What?
Are you? I don't know if I believe that. I don't know if I believe that. I don't know if I believe that.
Is that with the gamma squeeze?
That would be massive gamma squeeze. Let's pull the ChatGPT back up. All right, so now our friend Capital Flows is calling for a gamma squeeze on PURR in the next 50 days. What would this entail, and how would
again? This is okay. So all of the previous cases that you've talked about are with hype at 100.
Yes, that's the underlying belief.
You need a 2x on hype spot.
Not even. We're at 57.7. We need like a 90% move. Yep. 85%.
What do you think the rest of the market has to do in order for us to get a 90% move on hype?
How would it affect our projections? What's up, New Type? I don't know if you're bullish, if I'm bearish.
The hype TWAP is negative. So.
Negative 4 million in the next 1 hour. Yikes. All right, so what would a gamma squeeze look like? A true gamma squeeze would be different from a NAV premium story we've been discussing. The NAV story says hype goes up, PURR NAV goes up, PURR price goes up. A gamma squeeze says PURR price goes up. Market makers buy PURR stock to hedge calls, and PURR price flies. PURR's 825 today. Tons of traders buy calls in these strikes. I think we heard they were up to about $18 to $21.
They were 20 when PURR was above 10 or 11.
And so Delta on those calls increases, market makers buy more shares. It is perfectly susceptible. It is particularly susceptible to a gamma squeeze, smallish float relative to market cap, strong retail narrative. It's got this PURR token. If hype rallies,
the small-ish float relative to market cap is the same reason.
All right, so without a scenario, bear, moderate, bull, mania with hype at 100. A gamma squeeze can temporarily disconnect price from NAV. That's how you can get 20, 25, 30 before hype even gets to 100.
I mean, there is a possibility that you get some sort of gamma squeeze scenario before hype, with hype not even moving to 100, but you would require, in order to do that, you still need people buying options on PURR. And
Yes.
why are people going to buy options on PURR? Because they want to speculate on PURR and therefore hype.
Yes. Yes. So this is the dream scenario for PURR bulls. And this would be a massive, massive move. What does
Look,
this
Hyperliquid is
do
the
to
most
our
liquid
projections?
place to trade Bitcoin. It's becoming, right now it's the most liquid place to trade SpaceX because SpaceX is not live yet. I'm interested in the scenarios in which we take hype to 100. I think the more that we take off the market, the more that we have potential when liquidity resumes, whether that means a bear market rally or the return of the bull market. We're going to see supply taken off the books, and Hyperliquid is going to return in a more reflexive format. And that's where I think we're headed. I think we're taking Bitcoin, ETH, and hype off the books.
How much premium is the market willing to pay is the question, ladies and gentlemen. Hype's flying. 10% today. Yeah, here's where we're at, Rob. So, guys watching, good morning, New Type, Shine, everyone else. And that's the state of things.
We've resorted to just cheerleading hype on this show.
All right, guys, let's get into our daily equity segment here from Ricky Ho, powered by our friends over at Denari. And we will cover what they're building. Asia's AI earnings beating US multiples. Let's flip it over to the daily equity. Two charts telling a different story from the narrative dominating markets at the start of the year. Let's go ahead and scroll down. The first chart is showing a decomposing of equity returns into earnings growth from the US versus Asia. And basically what we're seeing here is a complete shift in the AI Asian earnings.
So look, South Korea's equity market delivered the strongest 2026 returns among major markets, primarily driven by earnings growth rather than valuation expansion. Guys, remember, in equities, these things actually have revenue and earnings, which means that we can value them based on fundamentals. And typically there's a multiple, that is the valuation expansion, where we have price to earnings multiples. When we have these fervorous moments, we have liquidity bubbles, that's when multiples get out of control. But if earnings are up and multiples stay where they are, then that is just pure fundamental growth. That's what we want to see. So if we're taking a look at what we have here on the screen, a couple of charts, we've got global equity return composition on the left, global equity valuations on the right. Valuations have actually come down, which is healthy in a market. It does mean that maybe these valuations aren't as durable, or the cash flows aren't as durable, because essentially what you have, if you have, a 26x, for instance, multiple on cash flows, you would expect that the company is able to return their annualized cash flow for the next 26 years.
Yeah, man, you would. And at this point, American equities relied a lot heavier on the valuation re-rating.
Right.
With forward PE multiples moving above historical averages. In this case, American equities are no longer just, the AI trade is no longer just an American phenomenon. It is a global capital movement, specifically in Asia, that is happening. Guys, that has been our tokenized daily equity show powered by our tokenization partner, Denari. Thanks for being a part of it. We're going to be right back with our first in-person guest here at the Tokenization Tower, Keone from Monad. It's going to be a great segment, guys. Don't go anywhere. We'll be right back, and we'll be live with Keone. Alrighty, guys, welcome back to the Tokenization Tower. We are live here with Keone, the founder of Monad, or co-founder of Monad. Been a while since we've had Keone on. Keone, welcome to the Tokenization Tower.
Thanks for having me. Great to be here.
Yeah, man, for sure.
Thanks for coming. So what is the co-founder of Monad doing at an ETHConf event? You're not here for ETHConf, you're here in NYC.
Yeah.
Have you been doing much around ETHConf? We've kind of heard some mixed things about the conference.
I think it's been great. Monad has actually been hosting events every day. So we had a huge hackathon on Tuesday with over 100 hackers, over 70 projects, like really great energy on Tuesday. We had a consumer night yesterday, and yeah, there's just a lot of stuff going on around the Monad NYC office.
Yeah,
Very
man.
cool.
It's definitely the place to be. I mean, we've been here for a couple months, and
yeah,
it's been there's so many people coming through, and just conversations and happenings, and so, man, I think it's been maybe 8 months since we had you on last. Would love to just get a quick primer on the state of Monad, from the applications, the ecosystem, to the team, the roadmap. Just kind of give us a high level of what is the state of Monad as it is today.
Sure. So Monad is a project that's been going on for over 4 years now, actually. We started in early 2022, and the goal at that time was to really materially improve crypto and really materially improve the EVM by introducing a lot of modern computational techniques like pipelining and a lot of low-level systems engineering to deliver really high performance and to deliver the things that users ultimately want. We went live with the mainnet in November, so about 6 months ago, and it's just, you know, for me, the mainnet was really just the MVP of Monad, the minimum viable product to deliver full Ethereum backward compatibility, support for all of the major infrastructure that's needed, whether that's bridges or oracles like Chainlink or Pyth, or all of the tooling. And then what we're doing from here onward is delivering the features that we think ultimately are needed in the crypto space, whether that's privacy, MEV resistance. Like these are properties that are really missing from L1 blockchains, and that's what we're going to be delivering on in the coming months. But the mainnet was like literally when Frankenstein's monster comes alive, and you know, that first pulse of life. And since then, it's been really quite exciting to see the network grow.
Yeah, and that's when it's born, and then it's time to, you know, raise the thing into a growing adult. And so, you know, you kind of mentioned doing some of the computational improvements to the low-level systems engineering of the chain itself. I'm curious, and you know, you mentioned the hackathon and several applications and founders now building on Monad. Was the original inspiration to make those improvements for finance, or did you have a bigger, maybe more robust vision of what the chain could support, and that's why you were making those improvements to the chain?
Ultimately, finance is a big part of the story of crypto, and a big part of Monad. I think that when you think about the internet, like the internet is amazing because it is universally accessible. Regardless of wherever you are in the world, you have access to the same Wikipedia. You have access to all the same information. But that didn't used to be the case. You used to be subject to like whatever information was available to you locally in your library. And I think that finance, unfortunately, is still very, very siloed, depending on what country you're in, what banks you have access to, what platforms you have access to. And so I do really believe that delivering what the internet did for information for finance is really a huge part of crypto's offering. So it's about universal access, and it's about the features that come from composability, whether that's leverage or cross-margining, or just generally like the fact that we have programmable money rather than simple money. And so, you know, in this story, it is really a story about finance. And I think the next couple of years for crypto are about getting all of this, really realizing this vision and making significant bridges to the rest of the world.
Yeah, and I think like dominantly has been perps, tokenization, stablecoins as kind of like the big sectors of finance that are attracting the most amount of capital, generating the most amount of returns, and kind of like becoming like a formidable on-chain ecosystem of an economy. in those three categories, how is Monad kind of thinking about each of these sectors? How's the growth been in these sectors? And what are some of like the priorities for this part of the financial stack?
Yeah, I think everything that you said is true, that stable coins are a huge part of the story in crypto and in Monad. Vaults are a huge success story within the Monad ecosystem. The accountable vaults in particular have attracted significant capital across 7 or 8 different vaults that are offering really compelling products and ultimately delivering a lot of value both to borrowers and lenders. On the PURP side, Purple is currently in private mainnet right now. You need an access code, but I believe that will be changing quite shortly, actually. They've announced their points program, and Purple is a fully decentralized perpetuals exchange on Monad, fully on chain, currently supporting, I think, 5 or 6 assets.
Great name. Purple for Purple Exchange. And Monad, obviously.
And the reason that I asked that is because there's been this kind of really, I call it like this return of fundamentals, but you can call it kind of whatever you want. It's like the whole industry is, like in our first conversations, Keone, we would be talking about the technical architecture of like modular versus monolithic, or about like scaling chains in a horizontal fashion versus verticalizing the stack. And all of this foundation on the technical side has been laid. And there's a lot of improvements to be done, as you kind of opened up saying, and one could argue that these are more marginal than kind of getting the foundation out, the MVP out, but obviously still very important. But the industry is now in this state of, what is your business model? What is your institutional allocation plan? Are you generating revenue? How are you thinking about token buybacks? And this too shall pass. This is like a pendulum, I think, swinging very far one way after it being on the other side, and it'll probably settle somewhere in the middle. But I'm just curious, like from the founder perspective, what have been the adaptations that you've made to your strategy, to the way you're thinking about the chain, the product, the token, as we've kind of entered into this more institutional era, but also this more like show me the money era? Has it changed your perspective or your actions or your visions at all, or kind of just like generally curious how you're thinking about this current state of affairs?
Yeah, I guess I want to make 2 separate comments that are both thoughts that I have in response to what you said. I think the first is, no matter what, we always have to be delivering value to users. And I think crypto can deliver an incredible amount of value to users through the combination of universal market access and through composable, programmable money. And those 2 fundamental things can deliver an incredible amount of value, because right now we do live in a world where the financial system is completely regionalized, completely compartmentalized. And when we break that down, there's an incredible amount of value that can be delivered. I think that whenever we talk about protocols or companies or ideas that ultimately are really valuable, those are the ones where they start with a desire to deliver a lot of value to users, and then they find a way to ultimately make money from that. And we've seen that, whether that was Google or Facebook or NVIDIA, or these are teams that care a lot about a really high quality product that's very finely crafted and involves a lot of opinionatedness. But they care about doing that because they care about delivering value to users, and they know that they'll be able to find increasingly more and more revenue as that grows, as the product grows, and as the user base grows, as the network grows. And so I think that there's, it's what you said, like, definitely show me the money. We should care about revenues, and we should go toward where there is value. But also, one could start worrying too much about revenue from day one, where then you start locally optimizing rather than globally optimizing and having that bigger picture in mind. And so I think for Monad, that really big picture is that programmable money is an incredibly important thing to society. It's incredibly valuable. And doing that in a decentralized, credibly neutral way has incredible value to the rest of the world. When we talk to enterprises, when we talk to banks, when we talk to folks that have significant real-world businesses, one of the consistent things that we hear is that they care about not building in a walled garden. They care about not building inside of an ecosystem where there's one anchor tenant who clearly is going to end up preferencing themselves in the long run and is going to end up verticalizing and competing directly against them in ways. They care about building on credibly neutral, decentralized environments like Ethereum or Monad. And so I think that the real value that Monad can deliver to the world is delivering that really dependable, really performant, really well-engineered system that delivers a high degree of decentralization and is credibly neutral and is not just, like a centralized thing that is kind of run by one big company. So I think that's at a high level, like what the vision is and what we're building toward, and we're part of the way there. But technology is a big part of that story as well. And so to the point earlier about how mainnet is the MVP, mainnet took a lot of work to get there, and it's really performant. It's an amazing system. The Category Labs team, formerly known as Monad Labs, like the team that built that is super talented. They're the best team of engineers in the space, in my opinion. But they built this all from scratch. They know it like the back of their hand. And so now they're making improvements to the technology that are introducing new features that we think are fundamentally really important as well to users. And those are things like privacy, MEV resistance. Like, these are fundamental properties that I think, although they sound very technical, they also are very practical. Like, people care about not being front run. People care about not doxing themselves when they go to the coffee shop and they pay for a cup of coffee. And so in my view, it's like, revenues matter, the adoption matters, the bridges to the rest of the world matter, but the technology also matters as well, because that's the thing that's underpinning everything and that allows us to deliver a system that is has these properties that are really attractive and trustworthy to people.
Yeah. The technical logical underpinnings are key to the vision, and they're the through lines in all of these groups that you're talking about. I heard you mention, you're talking to banks and institutions, and that is one customer profile. Also, hear you talking a lot about users and what's important to them. Decentralization, privacy, MEV resistance these are properties that are consistent among institutions as well as users. And for so long, there was the technical developers, founders, builders that weren't quite institutional, but we're also looking to build on chains and develop their applications. And I'm curious how you maintain a consistent, like, who is your customer? Can you kind of build with all three groups in mind as you keep in some of those technological through lines? Typically, businesses have a very narrow customer profile and then kind of build out from there. We've gotten more sophisticated blockchains, and so maybe we have more sophisticated customer sets. How do you appeal to all three of those groups and maybe more?
I think that it's kind of a commonly said thing on crypto Twitter that there needs to be, among new blockchain networks, one very specific go-to-market motion, one very specific vertical that needs to be focused on. And I think that that's kind of back solving from the success of one or two projects that have been really successful. But underpinning that was still, for any of those successes, was like 1,000 other things that were really important, and ultimately execution. And they succeeded. Let's just, to name names like Hyperliquid. Literally everyone on crypto Twitter is super focused on what made Hyperliquid successful. And I think one thing that often gets thrown around, apologies for making a little bit of a straw man, but it's like, oh, they focused on this one specific thing, one product. And I think that there are many ways to success, but I think that what Hyperliquid is doing is fundamentally very different from what Monad is doing. What Monad is doing is delivering a really decentralized, really trustworthy, and really credibly neutral environment where any builder can be successful. And that means not competing against the builders that are building on Monad. It means not king-making one stablecoin. It means not, and that doesn't, just to be clear, that doesn't mean that every single builder gets all exactly the same support on every single thing. because that would be communism, and it's not realistic. Like it, but it means really from a foundation perspective, trying to grow the ecosystem as a meritocracy, and really just allocating resources based on merit, based on speed of growth, based on obsession with the customer, and based on traction and ability to acquire users and ability to retain users. And I think that in the context of the question of institutional versus retail, or like, some consideration like that, I think that we're a big team. We have a lot of resources, and we attack the problem from multiple angles. But we do think it is incredibly important to get the real world adoption right, and to go where there's traction. And right now, it's very clear that there's incredible growth in the vault space, in the curator space, in growing RWAs, bringing more assets on chain. And that also aligns well with our thesis about the universal asset layer and universal market access, which comes from bringing many real world assets into one environment, and getting really tight spreads on them, getting efficient pricing. I think people talk a lot about bringing RWAs on, but they don't look at all the details of like, how expensive is it for users to ultimately transact in those? What is the creation or redemption cost? There's just a lot of details, and making sure that it's a great experience for users, not only purely nominally from what's there, but also how expensive it is to trade. And that's enabled by technology. That's enabled by fully on-chain order books. That's enabled by market makers competing to quote really tightly.
A bit of a tangential question, but I heard you're talking about universal market access. This is something we hear a lot about, and ideologically, I think it makes a lot of sense. When you talk about the universal asset layer, that feels a lot more tangible. Can you just talk a little bit more? What does that look like? How does that get built? What is your end game for the universal asset layer? Is it one chain or one composable network of chains where everything is tokenized? It truly is the tokenization super cycle. Every asset on chain. What does the universal asset layer look like?
The universal asset layer is an environment where anyone can permissionlessly access a wide range of opportunities. It is the opportunity engine. It is, you have your wallet, whether that's a normal wallet or a smart contract wallet, or even a widget inside of a fintech app or a neobank app, where maybe a wallet, embedded wallet provider like Portal has basically given users of this fintech app who don't actually know that much about crypto access to widgets that allow them to access an environment where you get access to many assets, asset classes, whether that's equities or commodities or FX or fixed income products, where they can earn yield by lending out currencies, or they can get capital, get access to capital, and pay the best rate possible. I think that, for small businesses, you're often like just borrowing from whatever your local bank offers you. And that's probably not a very good rate relative to the global marketplace of all possible lenders. And so I think the universal asset layer is really the story about getting many assets all in the same environment, making it really cheap to transact with them, making them divisible. So maybe you want to buy a fraction of a share of some equity, maybe in a different country than your current country. Or it's getting access to fixed income or lending products, either on the borrow side or on the lending side, and getting the best rate possible on both sides.
Yeah, and I mean, I think like what we know is that we need a very performant ecosystem to do that, or environment to do that. And I think like a lot of the space has expanded its viewpoint of, we're going to be trading the $150 billion of DeFi TVL, $3 trillion of crypto market cap on chain. So like whatever the hundreds of trillions of dollars of tokenized assets possible to be traded on chain, that is kind of like the new like TAM and vision, I think, for the industry, which I think is extremely exciting. But on the contrary, people are kind of like sentimentally wise, like kind of bearish on, oh, we're just tokenizing stocks and gold and other assets and just bringing them on chain to trade. Like that's what like the innovation here is. And so there's an interesting like sentiment gap around this universal asset layer concept where folks are like, we built all this technology to create a new financial system of some sort, but now we're just kind of like trading stocks on chain or trading pre-IPOs on chain. Why do you think that this is such an important objective still? And do you have anything to say about kind of the sentiment dislocation right now with the amount of progress that's happening on, you know, initiatives like this, but a lot of people inside the ecosystem, inside whether it's just broad Ethereum, Monad, just the entire space, are just kind of down in the dumps a bit about like the state of things, given how perhaps it's just prices, but the adoption is so strong. Talk to us about like this, like the broad sentiment gap here of this universal market access and trading on this asset layer, and how it pertains to kind of like what a lot of the OG believer diehards enthusiasts kind of came into the space for.
I think there's always two ways to look at any situation. You can always choose to look at the world optimistically or pessimistically, and I just fundamentally choose to look at it optimistically. I think that even if you're someone who cares a lot about very frontier or niche markets, and those are not the ones that are getting all the attention right now, because everyone's thinking about equities right now, and existing financial products and systems right now, you should be excited, because ultimately, if we deliver a lot of value to a lot of people, we grow the space substantially, not only from a capital perspective, but from a user perspective, then all of those users ultimately get access to more frontier markets or more experimental efforts, or, you know, like if you care a lot about DAO governance or something, and so you're upset that like no one cares about DAO governance right now because they care about tokenized equities. The reality is that getting more people on chain, getting more people to use the fundamental systems, ultimately it just makes all, you know, it's like a rising tide that raises all boats in the long run. But in the short run, like, you know, you're going to have to trudge through some mud, and you're going to have to, there are going to be challenges, no doubt. I don't discount that at all. But that's the way, you know, if you really care about caring about any particular product means caring about it even when it seems like no one else cares. Because if you only care about it when other people care, then you're probably too late to it anyway. Like, you have to be skating to where the puck is going to be.
Yeah, the bandwagoners. On this idea, you know, there's this kind of thesis that Andy and I have tossed around, and it's part of this general neo-finance thesis that we have, where we're tokenizing a lot of these assets. And, you know, some people are disillusioned with that, and it creates this sentiment gap. On the other hand, it could be a stepping stone to something bigger, and you're talking about a more decentralized world in general. I like to say, you know, a dollar on chain tends to stay on chain, right? And a dollar off chain tends to stay off chain. And so if we do get, you know, tokenized equities, these things are on chain, people are making their salaries on chain, we get the stablecoin super cycle, these things tend to compound, and ultimately these things tend to, you know, flow into the DeFi apps, and therefore the DeFi equities, you know, in terms of like the tokens that represent these apps. And it kind of, you know, this value does end up flowing into the assets that represent our industry, as well as those protocols. Just curious, do you agree with this in general as a stepping stone? A dollar on chain tends to stay on chain.
I agree, especially because of the network effects and the idea that, you know, it's the same thing as like running a store where you have the coupons and you give out like certain items at a very discounted value. Maybe certain things are the loss leader that gets people to the store, the Costco hot dog, or the pizza slice. But then people come and they ultimately then get access to a lot more products, a lot more opportunities. And I think the level of adoption is still super low for on-chain users. Like Ethereum has less than 1 million DAUs right now. So I think that it's rational for the industry to focus on delivering value. And it sounds crazy to say that. It's just like, go to where the people are, where people will gain value from using these services. And over time, we will we'll figure it out. But there's a huge amount of opportunity out there. The world is so big. There's 8 billion people out there. It doesn't take that many people paying you $5 a month or $1 a month to actually get to significant ARR.
Yeah.
For anyone.
And this isn't even in counting for agents, which I think has been a large conversation, right? And I see your face kind of light up here. The agent side is something very interesting because Monad is one of the chains that you could argue it is perfectly built for agents, just in terms of speed, cost, and in terms of like the composability aspect. Has your view on blockchains and Monad shifted with the proliferation of the advancement of intelligence? Like, I'm very broad question here, but what is your view on how agents may play a part in this universal market access asset layer? Is this something that you're really thinking about deeply? Is it kind of still on the frontier? Like, what's your agents meets Monad kind of perspective?
I think that ultimately what agents give us is just a much better interface for doing anything.
Okay.
Like when you're vibe coding, like it's so much nicer to be able to talk to something that's kind of presents as a human and ask it to do things and ask it to explain to you what it did and give you things that you can review as a software programmer. And then ultimately make a lot more progress than if you had to go and spend a lot of time searching through the code. And I think the same thing is true with many other kinds of tasks. So I think that agents ultimately just accelerate our ability to get things done as humans. And so from a crypto perspective, it's purely additive. It's purely beneficial. Like, people will be able to use the blockchain more easily than they used to. Like, I used to tell people, like, here is like this page on the docs that explains exactly how to run a node, and these are some of the properties of the system, and this is what. And now I just tell them, like, ask your Claude about Monad. Ask your Claude, like, about the properties of how easy it is to run a node. Ask your Claude to go run a node for you right now on your machine, and that's so much easier of a sell ultimately than having to like get people to invest a lot of time to know all these. I think the same thing is just true with respect to consumption of services, access to financial markets, and the whole 9 yards.
And so from the founder perspective, I take it obviously you're using agents and Claude or different services to help on the programming side. From the team and scaling and processes side, what does that look like for the internal side? We've seen people lay off a ton of different staffing groups or parts of their staff citing AI. We don't really believe it's quite there yet, but definitely integrated into the processes internally at the Rollup. What does that look like for Monad? How does Monad improve its efficiency and productivity? And how do you lead that in terms of ingraining these systems into the team?
Our team is a big user of AI.
A lot of tokens.
We love. I feel like our token usage actually has not been crazy, so I'm happy about that. But I think in terms of like the efficiency gains, and so we have an agent in Slack that we can tag and ask to take care of all kinds of tasks. It's fully integrated into the Monad blockchain and has access to a full index data warehouse. It's super easy to ask it to go construct dashboards or look up anything or tell us about what's going on or go do work and go open PRs. And that's super exciting because then we see engineers and non-engineers alike going and ideating and asking the agent to go do things and being able to be fully in that feedback loop to ultimately build better and better products and systems. With regard to the idea of how it changes like the composition of the team or layoffs or what have you, I think that ultimately the most important thing is that people, like everyone on the team, be good users of AI and be able to use it to enhance their productivity. And I think for our industry more generally, like, there's some people that are going to be really good at that and embrace it very deeply, and others that are not able to make that leap. And so I think that would be where sort of like the bifurcation happens. But from our perspective, we don't think of AI as something that that replaces humans or that allows us to have like a smaller team. It's more like we just want to be able to do way more because now we just have these enhanced capabilities, each of us, and it's a big problem. We're going after a huge opportunity, and we need everyone to be super efficient, and we need also to be able to communicate more efficiently by using AI. So like, we have the agents like opening linear tickets and summarizing and like helping us really stay organized and actually be much more efficient from the entire organizational perspective as well.
Yeah. Keone, I'm curious, maybe shifting gears a little bit into like more of a value accrual. I think the space has been challenged with this Jevons paradox pretty difficultly, in the sense that, and I've asked several founders and from kind of different companies here. Like I've asked Joseph Shalom with respect to Ethereum. I asked Danelle from Stellar about this, and the founder of AVAX as well, and just across the board, the goal of several of these networks is bringing transaction costs down for a similar purpose, universal market access, and enhancing the user base and the user capabilities of these networks. It feels fundamentally contradictory to the value accrual thesis for a lot of these networks, in terms of, the goal is to charge fees and accrue value. And the way that that's done is taking a portion of, a fee on these transactions. And so I understand Jevons paradox is, look, induce supply, make it, exorbitantly affordable to transact on this network and, explode the amount of activity that's happening on this network. And if that's the case, then, we get the best of both worlds because we get, very affordable transactions. A lot of people can use it. They don't pay a lot of fees, but because of the network effects and the large user base, the network itself is still able to, accrue value and sustain. And so I'm curious if this is on the right track, if we still are just so early that, we should continue to make these things more scalable, get more activity here. Ultimately, the network effects will prevail, or maybe there's another perspective or another approach to this paradox.
Yeah, I think the key phrase in that question is network effects. I think that it's trivial to spin up 1,000 forks of Ethereum or 10,000 forks of Ethereum or 10,000 forks of Monad and just say like, okay, well now we have 10,000x the block space that we did before. And each one is like running on some different, but the problem is the network effects would not be there on the other 9,999 copies. Mm-hmm. The network effects are all the users, all the capital, all of the applications, all the indexing, all of the capital allocators, all the curators, all the integrations, all of the Oracle, like all of that stuff. That's what is really valuable. And that's what, that's the network effects are the reason why Solana generated $1.5 billion of transaction fees in 2024. And this is a little bit dated now, but like that's the reason why Ethereum generated in excess of $3 billion of transaction fees in 2021. It's because everyone wants to be there. Everyone wants to be in that environment where everything else is. And so I think transaction fees are relatively cheap now on Monad, but we would love to see them be even cheaper. The goal is just the growth of usage and ultimately the value that end users get from using apps or getting access to capital or getting access to opportunities. And then, there's some amount of fees that end up getting paid to the computational network that delivers all of that. But we have to start with the value to end users first.
Yeah, it makes sense. And the way you describe, the proximity to where the action is, if you will, like on Ethereum in 2021, on Solana in 24, it showcases the value of popular apps and applications and where the attention is ultimately draws people in, and that is what people are willing to pay for.
Yeah, I also would just say that, one of the paradoxes of crypto is that, as I said, like you could fork Ethereum 10,000 times and just run all those copies, but everyone will still want to be on the original one. And I just think that there will be a consolidation of networks over the next coming years, like the next 1 to 2 years. Yeah. We used to say, oh, there'll be 1,000 blockchains, all have like a ton of activity. And then we said, well, as an industry, we said, but there'll probably be 100. And I just think that actual number where all that activity is happening will be concentrated in just a couple. And the reason why people will pick those couple is because of the services that are there, the apps, the capital, the opportunities, and then also the fundamental properties of the network that probably are what attract those builders and attract that capital. And those are things like MEV resistance, pre-trade privacy, and trust, performance, decentralization, trust minimization.
Yeah, as we like to say, the table's being set, and there's only so many tokenized equities and tokenized deposits and stable coins to go around, and this is still very, very early, and there's trillions to go around, but they are finite, and they will end up on a finite amount of chains.
On this note, we have a question here from one of our loyal community members on this note of kind of like this consolidation and really Monad having a place at the table, right? Is what is the breakout app or app category that puts Monad on the map in kind of like a bigger consumer grade way? Like, do you have a ever growing thesis or sector or app or kind of a general philosophy on the breakout of the Monad brand as a chain in terms of user base, similar to kind of like Solana Trump meme coin was? What is that like sector or breakout category or app on Monad?
I think I have some theories on what'll be successful, but I think it's also really up to the individual builders to just go take their shot and prove themselves. I think generally speaking, we think that the motion of working with fintechs and getting crypto embedded in the consumer apps that they ultimately, have like tens of millions or hundreds of millions of users. That's extremely productive, and so there's a lot of efforts in place within the Monad Foundation to bring many users on chain, perhaps without them even realizing it, by giving them access to DeFi through more of like a traditional interface. But I think that, it's a mix of like working with existing companies and then cultivating an environment of extreme entrepreneurship. And so that's really what our Nitro Accelerator, which launched about 2 months ago, giving $500,000 to a select number of teams that are getting their first round of funding from great investors and getting their shot, going out and competing as early stage entrepreneurs. It's a combination of that, working with enterprises, working with fintechs, and then supporting really early stage builders.
And these are kind of like two separate paths, right? You got like a very like enterprise, finance, fintech, pure distribution plays, like deal signing, SLAs, licensing with large applications, neobanks down in Latin America, the largest trading platforms in the States, Asian, like anything from like a WeChat all the way to like their food delivery application. And then you've got like very much like on-chain native consumer retail products that are like kind of like innovative's new 0 to 1 ideas.
That's right, yeah.
Well, Keone, man, I know you're busy. I appreciate you spending some time with us today. It's been fantastic to chat and kind of catch up into this next era of the space. Like I said previously, we were speaking a lot about kind of like the technical side and like having these debates. We thoroughly enjoyed that era of our show and of the industry. But it's very much like into this, as I said, show me the money, application focused, breakout application, breakout viewpoint, like branding and revenue, business models. It's quickly evolved and maturing, and I think you guys are in a great spot. So I appreciate you spending some time with us.
Thank you. Yeah, I think the good news is that We have an amazing R&D team that's continuing to put in the work to deliver the technologies that, and they're really excited. They're really passionate, and they have very deep-seated beliefs about the technical product that's needed. And they'll keep doing that even if there's no spotlight on that, because ultimately that ends up delivering something that does matter to the end user. But then at the same time, we're here talking about the adoption and the products and building that bridge to the rest of the world, because you really need both ultimately in order to deliver long-term value and success.
Yeah, it's really important. Thanks for all the great work, Keone, and we'll see you next time on the show. Guys, we'll be right back with our next guest, David Schamis.
Don't go anywhere,
Tokenization
guys.
Tower.
We'll see you in the chat. New type, thank you for the question for Keone, and thank you, Keone, for joining us, guys. We'll be right back.
Thanks for having me.
Thanks, man.
Money, power, and money, power, and we get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Alrighty, guys, we are back here in the tokenization tower with David Schamis, CEO of Hyperliquid Strategies, following a huge update from them today, following a Knicks win. David, what a game!
That was a hell of a game. There's no doubt. I wish I could say I didn't fall asleep, but I fell asleep.
Man, you guys had a huge announcement today, bringing the shares of PURR Hype Holdings, 26.2 million total Hype, added 2.5 million Hype tokens last week, getting up to about 2.5% of the supply or so. 210 million share count. You issued 22 million new shares last week, 199 million in cash. So you added $50 million in cash while also buying $150 million of Hype last week. Total, like your average entry is about that. I've got it on 31 here, but I think last time you told me it was closer to 39.
Yeah, it's come
now
up.
You
It's
added
definitely
higher.
come up. Yeah.
Yeah.
I'd love to be able to buy in the 20s like I was in January, but I can't be doing that now.
Yeah.
So yeah, look, we've had a nice MNAV for a while. And generally speaking, you know, when Hype's moving in the right direction, which it had up until, I don't know, a week ago or so, we're able to use that MNAV to issue stock and just run the playbook. Like, it's not complicated. We run the DAT playbook.
Yep.
We try our best not to pretend to market time, because when you try to do that, you get it wrong more than you get it right, because we're all humans. So we try to be as disciplined as possible. And it's basically been working. Now, obviously, as you said, our average price overall has gone up. That's okay. That's supposed to happen. And, you know, we're a bigger and bigger percentage of the total, which feels good. I think we're 26 or something million tokens right now.
Yeah.
And the circulating supply is 200 or so million. So we're actually about like 10% of the circulating supply, a little more.
Yeah.
So that feels really good to us. And as far as I'm concerned, when you look at our MNAV, on one hand, we're at that sort of decent level, and it's pretty volatile. So there have been points where it's higher or lower. At last I checked, before I left the office, you know, when you add back the DTL, we're still hovering around 1 or a little bit slightly above 1.
Yeah.
So like as an investor, you know, it's pretty easy to invest in this if you want to get Hype exposure, because like it's not a ridiculous price you're paying.
Yeah. I've got it at 1.12x MNAV as of live on the hl.eco site. You know,
That's probably, I think that is what with deducting the deferred tax liability.
Yes.
I think if you add it back, it's, I don't know, I don't have it in front of me, but it's probably 1.02 or something.
Got it.
And you know, we only pay that liability is if we ever sell tokens. If we never sell a token, we never pay that tax.
I mean, I take it you guys aren't planning on selling any tokens.
We are certainly not planning on selling any tokens.
Yeah.
We have, as per this announcement, you know, close to $200 million of cash on our balance sheet. On the other hand, I want to be really clear. Like, I'm not Michael Saylor. I'm not a zealot. You know, our job in the end is to create as much shareholder value for our shareholders as possible. And if the circumstance came where we needed to sell tokens to do that, we would do that.
Yeah.
Like, we're not religious zealots. We're corporate finance geeks, and I'm proud of that. I was at a dinner 2 weeks ago. I'm not going to mention any names. I was at dinner 2 weeks ago. It was a dinner about PURR and Hype.
Yeah.
And there was probably, I don't know, 8 or 10 people in the room. And I said what I just said to you guys.
Yeah.
And one guy was like, I'm out of here. And literally, in the appetizer course, he gets up and leaves. I'm like, well, where are you going? He's like, I would never invest in anyone that would ever sell a token. I'm like, okay, it's fine. No problem. I said, there are plenty of crypto zealots out there that you can find who will be happy to take your money.
Yeah.
But like, you know, we're super long and super bullish Hype, but we're not religious zealots.
Yeah.
Anyway, I didn't mean to go off track, but
that's a helpful story to kind of paint the picture that there are zealots out there, like you said, and
there's no shortage of religious zealots in the crypto world.
Yeah.
No shortage at all.
Is there a target amount? You know, we've heard 5% tossed around out there. It's like the target percentage of the supply that some of these DATs want. Is that a similar number? Do you have in mind a target?
So let's talk about this. So the circulating supply right now, I don't have these numbers exact, but off the top of my head, is 220 or 240 some odd tokens in total. Mm-hmm. When we think about, you know, what's the total tokens outstanding that would equate to the shares outstanding of a public company, we think the number is like 477 million. And we're actually going to be upgrading our website pretty soon. That's one thing we're going to be adding, which is our version of what we think equates to shares outstanding of a public company. And that 477 is basically circulating supply plus the unvested, unlocked stuff that the team has, because those people aren't quitting their jobs, right? That's going to vest over time. It's going to unlock, and that equates to about 477 million right now. So if you think of our 26 or whatever the number was divided by the 477, we're a little more than 5%. I have no limit as to where I think that number should be. 100 would seem strange to me, but we're happy to keep increasing that as the market permits.
Yeah. And so when you guys issue new shares like you did last week and you announced it this week, there's like a couple things happening here. There's a separate credit facility that you guys can access that I believe you haven't quite accessed yet.
No, we have. So let me explain that, because it is unnecessarily confusing.
Yeah.
There's something called an ELOC, equity line of credit.
Yeah.
All an ELOC is for a company that is less than 1 year old, which is what our company is, which means you're not S3 eligible. So if you're less than 1 year old, you're not S3 eligible. You can't do a normal ATM that lots of companies do. So because we can't do a normal ATM, we have to do an ELOC. And frankly, the only practical difference is there's like more fees in the ELOC than there is in the ATM. So once we get to 1 year, which is December 2nd, not that I'm counting, we'll be able to file an S3. Then we'll be shelf eligible, which means we can do regular ATMs, and it'll really look and feel exactly the same. It'll just cost us a little less money. Yeah. Now, the only caveat to that is there has been some announcements from the SEC that might be actually getting rid of that 1 year rule. So it might be that we missed that because we'll be 1 year in December, or maybe we'll catch the tail end of that, where we'll be able to be S3 eligible earlier, which would be great. But the ELOC, we have tapped it.
Yeah.
I don't know the exact number, 400 some odd million in total out of the billion we've done, but we can obviously, there's ways to extend that and all that. So like, it's not like that's some hard limit that will never go above. And but we have done that, and I think people have gotten confused because it's got a funny name, equity line of credit. It's just an ATM in a different form.
Got it. And so when you issue those new shares, is that what you're able to tap the credit line on? Is the total shares that you guys own, or when you issue those shares, you're then selling those shares to buy more hype and to raise cash?
Yeah. So again, don't get caught up with the term equity line of credit. It's just an ATM.
Yeah.
We're ATM like. We're selling those shares to the market. We're taking in cash every day. We use those shares to buy more hype. And then, between this week and last week, we also retained some cash.
Yeah.
You'll see that'll change next week or whatever. But yes, it's just literally cash comes in the door every day that we sell stock. We take that cash and we invest in hype.
Yeah.
It's not a complicated business model.
No. It makes sense, and it's easy to understand. And so, we read off some of the numbers, and we also kind of talked about the MNAV, which is hovering around that, 1.12, 1.13 mark, and you mentioned, DTL kind of brings that down to closer around 1. The model makes a ton of sense when the MNAV is high. You ATM, ELOC, effectively you issue shares, use that cash to keep cash on the balance sheet and use it to buy hype. When the MNAV is closer to 1, is there anything like what is there to do? Because it's not the prime conditions to go ATM, ELOC. So what do you do when the ATM or the MNAV is around 1?
So specifically around capital management, right? Because there's more things that companies do than capital management. But in this regard, around capital management, let's just say for argument's sake, we're hovering around 1. I think the right answer to do is to do nothing.
Okay.
And the key is you want to be in a position so you don't have to do anything. My former boss, Chris Flowers, one of his great lines used to be that, more times than not, the right thing to be doing is playing squash.
Yeah.
Which means like, just because you come to work and you get dressed up, don't think you have to do something to add value. Sometimes the right thing to do is to play squash or to go to the beach or whatever. Yeah. So, look, but my point is about having cash, right? Like if you're a DAT, like a lot of them we've seen who are on the edge of cash and are running out of cash, they're actually forced to do unnatural things, right? So like, I think it is super unnatural for a DAT to be selling calls against their tokens.
Yeah.
But we've seen a lot of them. I probably get 3 or 4 calls a week from, sort of crypto option dealers out there who are shocked to hear that we're not selling calls, and they tell me how every other dad I know does that all the time. And like, I understand if you're trading at whatever, a 0.95 MNAV or a 0.9 MNAV, and you're running out of cash while you have to do it, right? Like you're too high to liquidate, but you're too low to issue stock, and you got to keep the lights on. But we've worked hard, A, to have plenty of cash, we don't have to worry about that. B, we have 4 employees, including myself. So we keep the expense burn light. We sublet office at Atlas Merchant Capital, my private equity firm. We don't have our own office and our own fancy stuff. We keep the burn really light. And I think those are unnatural things to do, selling tokens, selling calls against your tokens. Some people say we should be selling puts. Like, there's lots of things you can do. It's all sort of interesting, entertaining, but unless we thought we were getting really good value, we wouldn't do it. The other thing we hear a lot about, and maybe, people call me all the time and say, you should be doing converts, you should be doing debt. We've done none of that. I would never say never. If we think there's real value, debt markets do crazy things all the time. So being on the other end of crazy things is a good thing to do. On the other hand, unless we thought the economics were really, really, sort of interesting, we don't have to fill our day doing those things. Just doing nothing's okay.
Before or after our last show, we had this slew of announcements that were hitting. So you were on the show, Hype was trading like 38, 39, 40. It was kind of right around, we were talking about your break even. And then all of a sudden we get this Coinbase and Circle announcement where the $6 billion, give or take, of USDC on Hypercore, there was a deal that was struck that is 90% of that revenue going to Hyperliquid, to the assistance fund for buybacks.
Yes.
And there's an amazing site, HL Ecos /stables, that shows based on the interest rate, which is around like the 3.25% now, that's an additional $175 to $200 million a year in buybacks of Hype, just because they were able to secure that deal. And that part of the thesis was not part of the thesis. We were just talking about HIP3, $3 billion of OI, huge kind of game-changing moment for the industry. But now you add this on. From the regulatory side, from the economic side, just give us how this has evolved, the Hyperliquid thesis from your perspective, from mostly those two angles.
Look, those are two big ones. On USDC, and by the way, I'm a Circle shareholder as a firm at Atlas Merchant Capital. We were investors in Circle, so I have 2 hats on this one. But I will tell you, it's a really amazing example of when you have sort of power, when you have power to be able to move pricing, how it really works. And when I've talked this story about what went on between Circle / Coinbase and Hyperliquid, I dramatize a little bit. I actually wasn't in the middle of it. I found out about it the same time you did. So it's not like I have any inside info here. But I get the impression that sort of last fall or so, Hyperliquid said to the USDC people, we have all this USDC on Hyperliquid, we should be getting a cut of it. And they said no. So Hyperliquid did USDH, its own token, its own stable coin. And the amazing part about it was, from then until whatever it was a month and a half ago, USDH got some traction. It wasn't blowing the doors off by any stretch. I mean, the last number I saw, which was like, 100 million or so, I'd say like not exactly cutting into USDC in a big way. And somehow just doing that got the 90-10 deal, which was pretty amazing. I don't know what deal would have been acceptable back in September for the team. Maybe more, maybe less, I don't know. But it shows you, Circle clearly does not want to lose 1 nickel of reserves. And I don't blame them, by the way. Like, they're still very much in the growth mode, and they want to see that moving in the right direction. So I understand why Circle Coinbase did it, and I think it was an sort of, the way I see it, it was like a 8 or 9 month negotiation from Hyperliquid, and then they did a hell of a job negotiating.
And then from the regulatory side, from the economic side, what does this change about the thesis from your perspective?
Well, as you say, I mean, the day it was announced, it was $175 or $200 million sort of plateau up in revenues that go, right to the bottom line, to the assistance fund. It's super meaningful. It wasn't, a 3% change. It was a material change. And there's a reason the token moved what it did. The most interesting thing, actually, if you literally go and find out when that announcement was, and you look at where the token, it didn't react immediately.
No, it took a day.
It took a day or so. And what that shows you is we all, everyone in this room is sitting there looking at their screens 24/7 and watching Twitter and super focused on crypto. It still shows you these markets are not like uber efficient. Like I'm pretty sure if we woke up tomorrow morning at 9 a.m. or whatever and found out NVIDIA revenue just took a 20% plateau up, I'm pretty sure that would react like that, the stock.
Yeah.
Here it didn't, and there's just still some inefficiencies. Like, people have to figure out what the hell that means. You read it again. What does that really mean? How bullish are you? And, the crypto markets and hype in particular, as far as just market efficiency goes in where it trades, I think still has some room to go before it's at, NVIDIA level, which by the way is a good thing, right? That shows there's like still plenty of time to get in here. You haven't missed it.
Yeah. Just on that note, I'm curious, and I was going to ask you at the top of the show, how many times do you check the hype price a day?
A lot. I mean,
It makes two of us.
Look, it's a different world when you have a 24/7 asset, right?
Yeah.
There's, I don't, there are 2 or 3 hour periods that go by in my life where I haven't checked it, but I usually say, wow, it's been 2 or 3 hours, I better check it.
Yeah.
And, like probably everyone we all know, I sleep with my phone next to my bed, and I put it in airplane mode, and, as soon as I wake up and turn it on, and the first thing I check is what the hype price is.
Naturally.
So, look, you can't help that in a 24/7 market. But by the way, like this is what's coming for everybody, right? Like we all know eventually all equity markets, all these markets are going to go 24/7. Just a question of how and when. And a lot of ways they already are, right? Like there are lots of ways to trade NVIDIA and Tesla after market. And you could get prices sort of any time. And obviously HIP3 and Hyperliquid has become a big part of that. But I check it a lot.
And so, you can trade things after hours, 24/7, also before they even exist. SpaceX, last time we checked, I think it was around 170, 175.
I checked earlier, it was like 168 last I checked.
And so I think that puts it around maybe just under
it's
2
at
trillion.
167 and a half right now.
Okay.
With like a ton of open interest too, like $165 million open interest.
Yeah, it's moved in the right direction. I mean, when you say a ton, that is a speck compared to what we're going to have tomorrow.
100%.
Right.
But it's insignificant. It's not a non-meaningful amount.
Yes.
And look, I've been carrying on about this a lot on Twitter.
I was going to ask you about this. Yeah.
Look, I've been carrying on about this a lot. I mean, if you look at Cerberus, right, which already happened, right? Cerberus was a little easier of a story because basically it came out on Hyperliquid, it popped up, it sort of crept up a bit over time. The IPO priced 35% below where it was on Hyperliquid, and then the market price, the equity price, shot right to the Hyperliquid price, and it's borderline straight line, which was amazing to see.
Right. Yeah.
On SpaceX so far, it comes out on Hyperliquid, it shoots up.
Yeah.
It's dribbled down quite. It's actually sort of went down, then it's sort of plateaued for a while, and then it's kind of shot down a lot over the last few days.
Yeah.
I don't know why. I assume what's been going on is, guys like me yelling at Elon, saying, dude, 135 is too low. Look at where it's trading on Hyperliquid. Clearly, they're not changing the price. It's happening tomorrow at 135, and presumably there's some disappointment in that.
Yeah.
So it's come down a lot. I assume. Like, I can't tell you where SpaceX is going to be in a month from now. I'm not even sure I can tell you where it's going to be like a week from now. I'm pretty sure it's going to open pretty close to where it's trading on Hyperliquid right now. That I have a fair amount of confidence in. I don't have an order to buy any at 135, but I kind of wish I did right now. But I'd probably sell it at 167 tomorrow. And look, it's easy to sit here and say that now. It's always easy to talk about stuff when you don't have a position, which I don't. But there's a decent chance that the SpaceX on Hyperliquid over the next 18 hours is going to be really fun to watch.
Yeah.
This was one of the things that the ICE chairman, New York Stock Exchange owner, Jeffrey Specker, he talked about how relevant this was going to be when SpaceX launched. How he said it was either going to be highly relevant or highly irrelevant because of how disjointed or consistent it is with the price that it is on Hyperliquid. Of course, this is in the midst of everything else, positive things that he had to say about Hyperliquid, bigger than NASDAQ, all of these things.
Crazy.
That was great.
Incredible to see. Just curious about your reaction to those comments. And then is he on the right track here? Like, this is going to be pretty important to make sure that we have some price consistency between Hyperliquid and ultimately where this ends up?
Yeah, meaningful price discovery. I think that's really the term. By the way, it was great to hear him say this was bigger than NASDAQ. I would say of every sort of titan in the exchange room to say that. I understand why, from his point of view, it's a little bit of a competitive thing to say NASDAQ, and I kind of love it. But look, it's super important, right? Like, the whole point here is that I believe strongly, that Hyperliquid is providing really interesting price discovery. And, Cerberus was and I tweeted about this. There's a chart floating around that I put together. Was amazing. It was almost a flat line. It was near perfect on price discovery for that. We'll see how it is on SpaceX tomorrow. SpaceX, look, Cerberus, I think, generally speaking, was sort of a regular way IPO, right? IPOs happen all the time. This was somewhat of a regular way IPO.
Yeah.
SpaceX is like nothing we've ever seen before. So like plenty of weird stuff is probably it's already happened and probably will happen with this thing. So I feel like as a Hyperliquid guy, I have a one-way option here, meaning if it predicts the price perfectly, I'm gonna be running around saying it predicts the price perfectly.
Yeah.
If it doesn't, I'm going to say SpaceX is so different. And I will take my mulligan there because I think SpaceX really is different.
It is.
The next one that comes out, I will stick back to my guns that it needs to provide serious price discovery. I think it will. My money's still, my livelihood is still on it doing a good job there. But we'll see. It is a pretty wild one.
Yeah. I mean, we've just had these string of incredible fundamental and market catalysts for Hyperliquid this year. I mean, HIP3, that was huge on the fundamental side. Then you had this Coinbase news, huge on the fundamental side, also huge catalyst. Then Cerberus, then SpaceX, then Anthropic, then OpenAI. Like there will just be this continued attention.
You forgot the most important one, by the way, which was a war in Iran.
Yeah,
that started, Friday, late on a Friday, when the oil markets, the traditional markets, were going to be closed for the next 48 hours.
Yeah.
I mean, that was talk about
this is insane.
Yeah,
so,
I think that's what got the CME's attention. I mean, how can they not notice that?
Right.
Sorry, I interrupted you.
On the IPO side though, how important do you think getting Anthropic and OpenAI are to Hyperliquid? After that, we're going to get a drawdown in terms of like the amount of IPOs coming out. Like the hype around AI it's going to be like the maximum point of hype with those two IPOs. How important are those moments for Hyperliquid?
Well, look, it is a foregone conclusion that when those two IPOs happen, they will come on, Hyperliquid via Trade XYZ pre-IPO, just like these others have. I don't want to swear to it, but I'm pretty sure they're going to do that, and that'll happen. So it's definitely going to happen. It's not like we hope it happens. It's going to happen. To me, the two questions are A, how much volume and open interest do we get? And do we see it picking up with each new IPO? And B, how good it is as a price discovery? And those two things are related to each other, right? Like for every one that happens, the better they are at discovering the price on Hyperliquid, the more more capital the next one should attract, because people are saying, this is real, this is meaningful. So both those two things sort of feed on each other. But I expect these, you're right, it's been a nice year for Hyperliquid because a number of things keep happening that are super relevant to it.
Yeah.
And SpaceX, Anthropic, OpenAI all fall into that bucket. I think it'd be great to see. And I, again, SpaceX is a different animal, but I will still predict that each one of these in succession will attract more volume and more open interest than the last one.
Yeah.
That's my expectation, and we'll see if I'm right.
Yeah, interesting.
One of the things that, the owner of the New York Stock Exchange said that I'm looking to confirm this because it sounded almost bizarre when he said it, but if I recall correctly, he said that these markets could actually be bigger than the IPO markets themselves. And I'm just curious if there's credence to that claim, if it's a reason because the derivative can be bigger than the spot. To think about the scale of this, if there is more volume and open interest here, it does indicate better price discovery. And if it actually is bigger than the other market, it becomes the canonical price and almost the leading indicator.
Yeah, well, I think it's already a leading indicator.
Mm-hmm.
What I think he was getting at was, at some point it's going to become, the investment bankers sitting in a room and picking where the price something is going to become less and less relevant. And as you say, like the bigger it gets, bigger than the IPO sounds amazing to me, but like the bigger it gets over time, the more important it's going to be. And if you're a big institutional investor and you planned on investing in, whatever, SpaceX or whatever, and you're worried that you put in an order for X number of shares and you're worried you're going to get cut back by a lot, being able to do it on Hyperliquid beforehand is really good.
Yeah.
And I personally believe that discount, the difference between where IPO is getting priced and where they're trading on Hyperliquid, that will shrink a lot over time. Over the years, even before I ever heard of Hyperliquid, I have personally been a big proponent, if that's the right word, of the sort of sell side, meaning the guys that are selling their companies in IPO versus the buy side. I've always thought that the idea of an IPO discount is ridiculous. Like it's literally just paying a toll to the buy side, and why do we have to do that? And I think this is a way to really solve that.
Yeah.
And to really change that.
Yeah, make that market so much more efficient. Also another catalyst that we didn't really talk about, but is very related here, is that perps are coming to the U.S. There's regulation here. There was the approval
ETFs as well.
ETFs as well. Just on the regulatory side, we saw Kalshi was able to get its Bitcoin perp out there. They also now announced that they have Hyperliquid perps on Kalshi as well. And so I'm curious because I saw some mixed opinions out there. Bullish or bearish, I guess, is the reductive way to frame it. But, I can kind of frame the argument two ways. On one hand, Hyperliquid is going to become available to U.S. customers. That's going to unleash a lot of capital. On the other hand, we're going to see new entrants into this market, regulated players, some of which we've been talking about, could enter and maybe siphon off some of that market share. Which one offsets the other? How do you think regulation is going to affect Hyperliquid's market share?
Yeah, that's a lot of good questions there. Let me try to tackle them and tell me what I missed. First of all, I would say, most importantly, I've been investing in financial services companies for 26 plus years. Let me be the first to break it to everybody. Very few, if any, financial services companies in the world have true franchise value, right? There's very little you can do in the financial services world that someone else can't replicate, right? Like American Express, that's a franchise value, right? Like that black card, people love it. It has cachet. It's hard to just replicate that. There's not a long list, right? So to think that you can be in any financial services business that nobody can ever replicate is crazy. And I don't think Hyperliquid isn't either. So, the more success they have, the more capital it's going to be chasing to try to do what they're doing. And I take that as a compliment. So that's sort of fact number one. Fact two is, look, they've had competition so far. Needless to say, they have plenty of competition for the Binances of the world, on the centralized exchange side. They had, a year ago or whatever, 9 months ago, all people could talk about vis-a-vis Hyperliquid was Aster and Lighter, and saying, here come some real competitors. CZ is behind Aster, like here come the big boys. And I think while they're certainly still around, they're meaningful. I think people sitting here today feel pretty confident that Hyperliquid did a pretty good job fighting off that competitor. And look, I think perps coming to the US, which itself could be, a 2-hour podcast. I think that's while Hyperliquid is not day one doing that, right? Kalshi is, Hyperliquid's not, that's clear. It's a huge step in the right direction for Hyperliquid. There was a reason, like the day that was announced, Hyperliquid moved up, because it is a big step in the right direction. And I think that one way or the other, and it's not exactly clear to me which way it'll be, but one way or the other, I think Hyperliquid will figure out how to get to the US. And, on one hand, I think it's probably not a big secret that there are probably retail traders in the US right now using VPNs to be on Hyperliquid, but that's fine, but that's not the big kahuna, right? The big kahuna is, institutional investors, whether it's trading crypto or trading NVIDIA or trading oil, having them, online in Hyperliquid. And I think to date, that's been probably either zero or near zero is our impressions.
Yeah.
And this is a big step. Perps are a big step to getting there.
And the ETFs are kind of, we haven't talked on it too much, but it's similar where it's like it opens up another pathway for people to buy into these assets. But from what I understand, there's different regulatory pathways that certain types of firms can get exposure to certain assets. Like there's some firms out there that can't buy the ETFs, but they can buy Hyperliquid strategies. And I'm not sure if it goes vice versa, but I'm just curious. PURR's been the way to express bullishness on Hyperliquid in the public markets. Prior to ETFs, there was no other way.
Yeah.
That allegedly led to premium to kind of like this singular golden child format of investing, and then now we have the ETFs. Do you think the ETFs are siphoning flows off of PURR?
So
what's your take on this?
I have two answers for this from two sides of my brain. On one side of my brain, I can't help but be competitive. I'm a competitive guy. We're all competitive guys. Like, I can't help myself. And, you know, everyone who wakes up tomorrow morning and says, I want to get some hype exposure, I want them buying a share of per stock, not a share of the ETF. That being said, in the end, right, 5 years from now, where we're all talking about this, like, this will be a success for all of us, me, you guys, any investor, not at whether the MNAV 5 years from now is 1.2 versus 1.1, it's whether hype has gone up a lot.
Yeah.
And the ETFs, you know, being out there, talking about it, getting more people, you know, engaged, and more ways to do it. Like, as you said, there are some people that probably prefer PURR over an ETF. There are some people prefer ETF over PURR. It might be an investment choice. It might be some legal or regulatory difference they have. Like, whatever it is, markets like choices. And generally speaking, the right side of my brain or whatever is perfectly happy to have more avenues for people to get hype exposure. Yeah. So the net of that, I think, is positive. I'm happy the ETFs are out there. I think I saw some analysis someone did on the thing we announced this morning, which, you know, is a week delayed. So it was really what we did in the week ending, you know, last Thursday. Yeah. I think we issued more stock than all of the ETFs combined took in. So, like, we're still doing well against them, but I don't, you know, if they take in a lot and hype goes up a lot, like, I'm not going to be that upset about that.
Yeah, we're good. Yeah.
And so, you know, we were invested in this relative strength trade, right? Yeah. And so, you know, I'm curious because things have shifted a little bit in recent days, right? And so we're still generally, you know, part of this. Bitcoin doesn't maybe, you know, it's not cooperating, let's say.
Not look good.
And then, you know, these IPOs are sort of a double-edged sword. They're bringing a ton of interest and open interest and volume to Hyperliquid. It has this entirely new, you know, revenue stream and product line as a result of it. But at the same time, people are a little bit skeptical of how these IPOs could affect the market. And we're, you know, kind of see the first of three, and then we're going to have a couple more. How do you think Hyperliquid reacts in kind of in maybe the best case scenario, worst case scenario, given the macro headwinds, tailwinds? Just curious, you know, what your view is of macro and the AI trade nowadays, and, you know, obviously Hyperliquid is a part of that.
Yeah, I would say a few things. One, I've heard the theory that, you know, Bitcoin's come down so much because a lot of that air is going into SPCX, whatever else. And I don't doubt that. Like, I'm not sure that's true, but I wouldn't argue against that either. It sounds plausible to me. I don't think Hyperliquid goes into that category. I mean, look, in general, there's no doubt there's some correlation with Bitcoin and the other large cryptos. On the other hand, like, if you look at 2026 so far, there's not a whole lot of correlation. Like, doesn't look correlated at all.
Yeah.
But the point is, let's assume that theory is true for a second, that people are selling their Bitcoin to buy SpaceX, which I'm not sure I'd recommend, but let's say they're doing that. Like, Bitcoin is trillions of dollars in market cap, or whatever, more than $1 trillion in market cap, I think. SpaceX is more than $1 trillion in market cap. These are huge things. Hyperliquid is a speck compared to that. And I think Hyperliquid has and will continue to trade more of a fundamental, sort of like a regular company. It'll trade on what people think, you know, growth's going to be of revenue, growth of buybacks, the way sort of a regular company might trade, and less about, you know, is Bitcoin up or down or whatever. So I think the combination of both fundamental analysis, which you can do on Hyperliquid, you can't do it on Bitcoin, and no offense, you can't do that on SpaceX either. Yeah. And the fact that, like, you know, it's so small relative to Bitcoin and relative to ETH right now. Like, if that air's come out of the tire, this is like barely a breath relative to that.
Yeah. So you know, Bitcoin finding lows in the 50s, 40s range that people seem to think is certain. We'll see what happens. You think Hyperliquid has this ability to kind of just trade in a divergent way?
I definitely do, but I'm not going to sit here and say there's no correlation. Of course there's correlation, right? Like, if crypto goes away entirely, like, that ain't good for Hyperliquid, right? Like, let's be really clear. And, you know, so much of what Hyperliquid has been able to build, so much of what got Hyperliquid to where it is, both literally and figuratively, right, are the crypto rails that are below it, that Bitcoin sort of led the way on, and ETH and so all led the way on that. So, like, there's no doubt, like, directionally, strong crypto is very good for Hyperliquid and weak crypto is not. I just think that the correlation we have seen in Hyperliquid sort of up until, if you look at a chart of Hyperliquid sort of pre-mid-January and post-mid-January of this year, it is like totally different from a correlation point of view. But don't get me wrong, like Bitcoin going to 40, in of itself cannot be good for Hyperliquid.
Yeah. Well, David, man, I think we have a little gift for you, man.
I love gifts. That's what I'm here for.
This is something from our team here. There's a couple things here.
Oh, wow.
So this is Hyperliquid Strategies engraved wine box with a nice bottle in there for you.
That is awesome. That is great. Thank you very much.
And
a flask. Oh my God, a flask with my name on it.
With your name on it. You have to show
that
the
is
camera.
good. There it is. A flask with my name on it. I own a couple of flasks. I have to admit I haven't used them in a while. But I definitely should with this one. That is awesome. Thank you, guys.
And there's a nice bottle of wine in here, and this just opens up.
Oh, that is totally
just pull
awesome.
it out.
Wow.
This is actually
goes down and in there.
Engraved by
Ton.
Wow, nice job. Very impressive.
Yes, sir.
Very impressive. It's
We
too
are,
nice to drink.
This is a thank you for fighting the good fight out there. Amongst
Boys have done all right from the last couple months on Hype.
I'll say 2 points. One, I absolutely appreciate it entirely. Two, I will remind everybody the first rule of Wall Street is there's no such thing as a free lunch.
Ladies and gentlemen, that is David Schamis from the Tokenization Tower. I think that also wraps up our show today. The Plume team's going to get some recordings in. We're hot in here. As always, guys, thank you for rocking with us in the show today. It's been an amazing show. So much going on. And
go Knicks, go Hyperliquid.
Go Knicks, go Hyperliquid. You know where we will be. Same place, same time, 12:30 p.m. Eastern, here in the Empire State Building, financial capital of the world. Go Knicks, go Hyperliquid. Thank you, guys.
Thank you.
Thank you.